there, so what are the best renewable energy stocks that you can invest in and will actually pay you a decent dividend yield? This video is part of a series of videos I'm creating whereby I'm visiting each sector and different industries to find the highest paying dividend yield stocks in any given sector. I actually posted this as a question in my YouTube community, and I want to say thank you to Shirley Williamson for the idea of this video, because her comment was good to know which green energy stocks would be great investments. So in this video, I'm going to literally show you the highest yielding green energy stocks, if you like, the renewable energy stocks that I have found. And then I'm also going to take it one step further, and a little bit like I did in my versus videos, I'm actually going to look into them a little bit for you so that we can analyze them a little bit, and at the end we'll be able to see which one was the better investment and why. If you're new to this channel, welcome. My name's Andy, and on this channel I like to talk about money and success. If you're interested in making, saving or investing money, please be sure to hit that subscribe button down below, hit the notification bell, and then you get notified every time I release a new video. And if you enjoy this content and find it useful, please do remember to give it a thumbs up, because that helps YouTube algorithm, which in turn helps me, and of course I do appreciate it. So without any further ado, let's jump straight in. I'll tell you how we're going to do this. We're going to start off, I'm going to tell you a little bit about what each of the companies does. Then I'm going to start running through some of the fundamentals of the company. We'll look at the balance sheet, we'll look at their book value, we'll look at other key metrics, we'll look at the analyst forecasts, and I will score it all, and it will literally be like a little competition so we can find out which one was the best investment. Obviously, we'll also be going through the dividends as well. Okay, let's dive in. First up, Atlantica Sustainable Infrastructure. You can see on the website what they say about themselves. We are a sustainable infrastructure company with a majority of our business in renewable energy assets. We complement our portfolio of renewable assets with storage, efficient natural gas and transmission infrastructure assets as enablers of the transition towards a clean energy mix. We are also present in water infrastructure assets, a sector at the core of sustainable development. I won't read all of this to you, but that is the gist of what they do. Next, Brookfield Renewable Partners. The name basically says it all. Brookfield Renewable Partners operates one of the world's largest publicly traded pure play renewable platforms. Our portfolio consists of hydroelectric, wind, solar and storage facilities in North America, South America, Europe and Asia. So these guys are worldwide and cover a wide range of clean energies. Next up, I like this, Clearway. I say I like this, what I like is the moving animation on their website with the solar panels there. And as you can see here, it says, built for the 21st century, Clearway is focused on providing customers low cost, clean power generated by solar and wind across the US. Next up is Next Era Energy. As you can see, they've got three dudes there, all with beards, notice. So I'm obviously not green enough because I don't have a beard. In fact, I have no hair at all. So I think they're saving the planet by not buying razor blades and using any shaving foam. That must be how they're doing it. I'm obviously doing it all wrong. I'm a bad man. Shoot me now. I'm sorry. Okay, so in all seriousness, I liked that they had what the difference between net zero and real zero was on their website there. They tell you what their plan is. Net Extra Energy is the first company in history committed to moving past net zero all the way to real zero, leveraging low-cost renewables to drive energy affordability for customers. We're going to start off with the assets versus liabilities. I've got the ticker symbols at the top, so AY, BEP, CWEN.A and NEP. So those are the ticker symbols if you want to look these companies up, but I'm going to run you through some fundamentals now. Here we go. So AY, which is Atlantica, current assets versus current liabilities, you can see they have a score of 2.07, which is very, very good. Now, if you've seen any of my videos, my versus videos in the past, you will know what weight and emphasis I really put onto assets versus liabilities. I do see this as a very important metric, because if a company doesn't have enough assets versus liabilities, it is at risk of going out of business. So by making sure that the balance sheet is strong, and that's essentially what we're doing here, you can be fairly safe. I see this as like a safety measure, and that is why I put so much weight on this basically. So for instance, current assets versus current liabilities, Atlantica has a score of 2, so it has actually over 2 years worth of current assets versus current liabilities, which is obviously great. Whereas Brookfield, BEP, has less than a year's worth, which is why I've put that cell in orange. But the general gist of it is if a score is over 1, that is good. And then you've got the same deal going on for total assets versus total liabilities. So if we skip on to the end of round 1, for the current assets versus liabilities, It's 1 to Atlantica, 0 to Brookfield, 1 to everybody else. And total assets versus total liabilities, everybody had a decent score on that, if you like, so they've all got a 1. That's the reason for that score. I hope that makes sense. So next we're looking at book value, because we want to see if these are actually good value to buy in relation to their assets at the moment. So that's why we're looking at this. So you can see here the current share price in the top row, then you can see the book value per share below that. If you don't know what book value is, I have made a video explaining what book value is and how to calculate it. I'll put a link up there and in the description down below so you can check that out. I'll also put links to each of these companies' investor relations pages in the description down below so you can go and research these companies more if you want to, because I'm not a financial advisor. This is not financial advice. You need to do your own research and due diligence. I'm just giving you the results of my research here. So let's carry on through. So as you can see, the price as a percentage of book value, AY Atlantica is almost double. Brookfield is only 40% over its book value. Clearway, or CWEN.A, is only 65% above its book value, whereas Next Era is almost double its book value. For that, we're going to give Brookfield half a point and no points to the others. I might be being a little bit harsh there. I should maybe give half a point to Clearway. In fact, I'm going to adjust this now. Half a point to Clearway. There we go. Clearway's getting half a point because none of them are below book value. If they were at or below book value, I would have given them 1 point. So here's the dividend yield. This is probably the bit you've all been waiting for, right? So the dividend yield. Atlantica is a 6.33%, which is obviously a nice high yield. Now, they all pay the dividends quarterly. You can see Brookfield pays a 4.34% dividend yield, and that has been growing for only 1 year. However, I made a little note here. It missed 1 dividend in 2019. Otherwise, it's actually been growing since 2014. So saying that's only been growing for 1 year is a little unfair, but it did miss a payment in 2019, which is why it's only got the 1 year of growth history there. Clearway Energy pays a 4.4% dividend yield. It's got 2 years of growth, and its growth rate is 5.73%, whereas Next Era Energy pays the smallest dividend of the bunch at 3.86% dividend yield, but it's got 7 years of growth. And then a very important metric to note there, what is the growth rate? So the annual growth rate that they're increasing their dividends by. You can see Atlantica and Next Era are head and shoulders above the other two in terms of how quickly their dividend has been increasing. So if you're a dividend growth investor, those two would therefore be preferable, because if they keep increasing their dividends at the same kind of rate that they have been, then obviously those dividends will be a lot bigger in the future. But they are all increasing their dividends, or have been, so that's a good sign. Obviously, the biggest yield was Atlantica, so that gets the 1. The next two biggest yields, I mean, they were over 4, so that's still a decent dividend yield, over 4%. So that gets Brookfield and Clearway half a point each, and no point for Next Extra because it was below 4%, so not really a high dividend yield. In terms of dividend growth, in terms of years, Next Era wins because it grew it for the longest period of time. Atlantica is in second place with half a point, and then the other two hadn't grown it for very long, so I gave them 0. Although again, that could be being a little bit harsh to Brookfield. Really, Brookfield has been growing it for quite a long time, apart from that 1 dividend miss. But it was a miss after all, and if you were relying on that for your income, that would upset you. So I'm leaving that at 0, but just bear that in mind if you want to weight these things a little bit differently. And in terms of the growth rate, well, there was 2 clear winners, and they have both got a 1. So next, we want to look at how the profit has grown, and the profit growth for these companies is visible in this graph here. So I want to start at a point where they all existed. So if we go here, they all existed, and you can see the numbers there. Brookfield was profit of 1.18 billion. Clearway was a profit of $500 million. Atlantica 0.36, and Next Era 0.36. Now, if we then forward all the way forward here, you can see how they have grown, and you can see basically you've got Brookfield has almost tripled. It's gone up by about 2.5 times, whilst Atlantica has gone up 3 times, I would say, and Next Era has gone up again about 3 times, whilst Clearway has gone up about 50%. So in terms of profit growth, I've put that on the screen there for you now. You can see Atlantica, it was actually over 8 years, 3.22 times higher than it was 8 years ago. That's its profit for the year, so that's good. Brookfield 2.65 times what it was 8 years ago. Clearway literally only 1.42, so only 42% up over 8 years. That is not great. And Next Extra, again, over 3 times, 3.14 times what it was 8 years ago. So as you can see, score-wise, I've given Next Era 1, Atlantica 1, and we've given Brookfield half a point and no points to Clearway. That's how we've scored it, and that's why I've scored it that way. So now we're going to look at what the analysts' forecasts are, so we get an idea of where the share price is likely to be in the coming 12 months. So let's do that. So Atlantica Sustainable's forecast. As you can see, Wall Street analysts have this as a hold. Remember, the current share price is $27.81. And if you look at the forecasts, you've got a low of $28, an average of $35.20, and a high of $43. On the right hand side, you can see the quant rating. This is from Seeking Alpha, is a hold, and you can see how many analysts have rated it. You've actually got 9 analysts rating this as a hold, 1 as a buy, 1 as a strong buy. I'll just jump in here. If you like what you're seeing here, this is Seeking Alpha Premium. That's what I'm using for this display here, and that's what gives me this data, if you like. If you are interested in using that yourself, see the pinned comment down below and the description. In there, I'll put a link where you can get an offer, so you can sign up for this for only $99 for the entire year's access, whereas normally it's $299. So $99 is a special offer price we've got for you at the moment if you use the link in the description down below. Hands up, I am affiliated, so I will get paid if you use that link. So if you do, thank you. Anyway, let's carry on. Brookfield Renewable Partners. So as you can see there, they've got this. Wall Street analysts have it as a buy, whereas the Seeking Alpha quant rating is a hold. You can see 7 analysts have it as a strong buy, 7 have it as a buy, and 4 have it as a hold. Remember, the current price is $29.11. And the forecast there, the price target forecast that you can see there, the price target forecast, as you can see, is $33 on the low side, all the way up to $44 on the high side, with an average of $39.59, which is actually a lot up on the current price. That's a 30% gain in a year, which is very good. Bearing in mind, it also pays dividends. Clearway Energy, as you can see, Seeking Alpha really likes this. Seeking Alpha has this as a strong buy. You can see that on the right hand side there on their quant rating. Wall Street analysts also have it as a buy. The 6 analysts have it as a strong buy, 1 has it as a buy, and 4 have it as a hold. If we scroll down to the price targets, here's the price targets now. So Clearview's price targets, you can see it's got a low of 34, an average of 38.65, and a high of 46. And it's currently 32.46. Next Era Energy. So remember, the current share price is 74.75. Again, the analysts have this as a buy. Seeking Alpha quant rating has it as a hold. You can see there are 7 analysts have it as a strong buy, 4 analysts have it as a buy, 5 analysts have it hold, 2 analysts actually have it as a sell. And if we scroll down to the price target there, you can see the average price target is $85.13. So it's only slightly up off the current. The low is $70, which will actually lose your money if it goes down to what they're predicting. And the high is $95 per share. So taking all that into account, I've given half a point to Atlantica, 1 point to Brookfield, 1 point to Clearway, and half a point to Next Era, because they all had fairly good ratings, but some were better than others, hence the scoring. So the overall totals, we have Atlantica has 5, Brookfield has 4.5, Clearway is the loser, I suppose, with just 3, and Next Extra is 5.5. If you're interested in seeing all of the data that we just reviewed there it is, all in one place on the screen. So there's something you can take a screenshot of if you are interested in such things, and then you can score it as you see fit. And if you're looking for more high yield green energy stocks, why not check out my solar REITs video? I'm just about to make it. It's going to go there, so you'll be able to click on that. If you're not interested in that, but you're looking for other high yield ideas, then check out one of the videos such as that one there. Have a great day. Thanks for watching. Bye bye.